Hey, hello investors and future investors. Welcome to the channel. For today's video, I will be showing you how to trade Beyond Meat. Now, this stock right now, it has extremely high volatility and is one of the best meme stocks right now. I'm going to show you how to capitalize on this momentum and make some income along the way. Now, if you are new to options trading or you're trying to use options to make some additional income to help supplement your regular 9 to 5, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to be showing you how to capitalize on one of the best momentum meme stocks out there. I'm going to show you how to make money both ways, whether you're optimistic about this stock or whether you're bearish about this stock. Now, you guys know how we do. We like to go ahead and get down and dirty with options. Now, when I say we're going to go ahead and get down and dirty with options, I simply mean that I will be giving you a step-by-step walkthrough of these option strategies in order for you to be able to follow along with me. And if you so choose to, maybe you could go ahead and try this with your portfolio. Remember, do not focus on the stocks, always focus on the strategies at hand. That being said, let's go ahead and jump into the advanced feature on Robinhood for us to open up the chart. We're going to go ahead and look for the 1 year outlook to see how this chart looks. Now, right away, you could see a huge spike right here, and that might be scary to most, but this right here presents a very good opportunity. Now, that spike is very good, but what I want to focus on is this blue line right here. The blue line right here is what's known as the MA200 or the 200-day moving average. It simply tells us where the share price has been trading for the last 200 days or 6 months, and that currently sits around the $3 range. So we're going to use that as a pivot in order for us to go ahead and choose our strike prices. Now that we have that, let's go ahead to the Beyond Meat stocks, and I'm going to give you a bit more information before jumping into these option strategies. So Beyond is currently trading at 4.44 at the making of this video, and if we go ahead and go down, we're going to see that the 52-week low for this stock is about 50 cents, whereas the 52-week high is about 6.64. Currently, the current share price of 444 simply tells us that the stock is way closer to the 52-week high than the 52-week low. So that gives us a little hint that there may not be any opportunity there. However, because this is a meme stock and it's trending right now, there's still opportunity there. And I'm going to go ahead and explain to you why it's actually trending as the video goes along. So let's go ahead. We're going to go down now for a bit more information. Now, this here is extremely important. As you can see here, under the trading trends, the hedge funds are buying this. This information might be a bit misleading because hedge funds actually have to buy this. The reason why they have to buy this is because right now they're going through what's known as a short squeeze. With a short squeeze, it simply means that these hedge funds and big institutions actually shorted the stock, which means that they bet against the stock. The reason why they went ahead and bet against the stock is because the stock is extremely leveraged. The company debt is about twice as much as the company's asset. So they're betting that the stock is going to fall. Now, because the share price is currently going up right now, in order for them to not lose, they need to go ahead and cover that short, which means they have to go ahead and buy the shares. Hence, you see this huge candle right here. They have to buy the shares. Now, they're not buying the shares because they want to. They're buying it in order to cover their short. So make sure you don't misunderstand that information right there. Now, let's go ahead to the insiders and what the insiders are doing. Now, this here is of key importance once again. The insiders always knows something that we outsiders do not know. So this huge candle says that the insiders are buying. So either there's something that's going to be coming in the near future that's going to increase the share price or is going to increase the value of this company. So the investors decided to go ahead and buy. I always like to follow what the insiders are doing because, like I said, they have more information than the rest of us. Now, lastly, we're going to go ahead and see the recommendation for this stock for the analyst. Now, the recommendation is a sell for this stock. Now, I do not understand why it's a sell for this stock, and I'm going to show you why I don't understand that. If we were to go a bit further down, we could see the research report. The fair value that the analysts give for this stock is a fair value of $25. Currently, like I mentioned, the actual price of the stock is $4.44, which gives us about a 3x or more multiple upside for this stock. Meaning if you were to invest in this stock and it goes to the fair value, you could probably 3x or 4x your money. So based on that, I'm not sure why the analysts are saying this is a sell. Now, lastly, before we go ahead and jump into these option strategies, I want to bring one more thing to your attention, which is extremely important as well. And that is going to be the earnings. So earnings is going to be available on November 4th. You must know whenever earnings are before you go ahead and do options. That helps you determine your strike prices. Now let's go ahead and jump into trade beyond options down here in order for us to go ahead and open up the options chain. Now, for those of you new to the channel, or if you're new to options trading, all this information down here in its entirety represents the option chain. What the option chain does is that it gives us all this information to allow us to go ahead and make a very informed decision before entering any options contract. Now, speaking of option contracts, I want you guys to do yourself two favors before I continue. Favor number one, always make sure to do your own due diligence before investing. What may work for my portfolio, quite frankly, may not work for your portfolio. Favor number two, always make sure to have an exit strategy before entering any options trade. That way, if the trade do decide to go tits up, then at least you know how to get out of the trade. And I will be giving you exit strategies in today's video. Strategy number one that I will be doing personally. Now, here's my recommendation for this stock. Do not trade this stock. If you are a more advanced option trader, then you could probably go ahead and trade the stock. If you do decide to trade the stock, make sure it represents a very minuscule part of your portfolio. Now, this is what I'm going to be doing personally. I'm going to be going to buy, I'm going to be going to call, and I'm going to go ahead and choose my strike date. The strike date I'm going to be going with is going to be November 14th, which gives me 24 days to expiration. The reason I'm going to be going with November 14th is because me personally, I like monthly expirations. That's number one. And the second reason is that earnings is going to be on November 7th. So I want to give myself just a couple extra days in order to outweigh the volatility of this stock. So November 14th is going to be perfect for me. If you so choose to, you could always go ahead and use November 7th or November 21st. These both going to work as well. So now that I have the buy and I have the call and I have my expiration date of November 14th, I'm going to go ahead and choose my strike price. The strike price I will be going with for today is going to be none other than the $3 strike price. The reason for that is that I just showed you that the 200-day moving average price was $3. So I feel very confident with that price. Now, can the stock drop below $3? Yes, it absolutely can. But the $3 price just shows us there's a high probability that if the stock do decide to go down, it's going to settle somewhere around the $3 strike price. Now, because this is a buy option strategy, I'm going to have to pay. The amount I'm going to have to pay is going to be $1.79. Let's go ahead. We're going to click that. We're going to hit continue. And there you have it. This option strategy is known as a long call. In this case, it's going to be a short call because it's less than 30 days out. Now, this is how you win with this option strategy. Once you go ahead and buy this and you put it in your portfolio, one contract is going to cost you $179. And that's simply because each option contract does contain 100 shares. So you simply multiply the price you need to pay per contract of $1.79, you multiply that by 100 shares, and that should give you $179.04 in this case. Now, once you have this long call in your portfolio, what you're going to go ahead and do? You're going to go ahead and do absolutely nothing. You need to let the time you chose here, you need to let that time work for you. Now, before I go ahead and explain how this works, I want to go into scaling. If you are going to go ahead and do this contract, make sure you do minimal contracts. So me personally, I'll be changing this here. I'll be doing just about 5 contracts, which is going to cost me just $900. $900 is a very insignificant part of my portfolio. I can afford to lose $900 and not lose any sleep. So just make sure you're trading within your portfolio range. Now, we're going to go ahead and we're going to go down to the chart. So I want to bring your attention right now to this white line right here, smack in the center. Now, this white line right here should coincide to this price right here. So 4.72, which happens to be the break-even price. And the white dot represents the break-even price of 4.79. It's close enough. What the break-even price tells you is that if you have this long call in your portfolio, you sit on it, you do absolutely nothing. Come expiration date, if the share price is trading at anywhere at 4.79 or above, then you're going to be making money, or you're actually not going to be losing money. So come expiration date, if the share price is trading at $4.79, you could go ahead and close out this contract, and you're going to get back the money that you paid to get into this contract without making any losses or making any gains. However, that's not what we're here for. We're here to make gains. So what you're going to be looking for while you hold on to this contract, you're going to be looking for movement above the 479, and just follow my cursor right here. Once I go up this way, you're going to see the prices begin to change. So we're going to go right here to the $5 price. And if this stock decides to go to the $5 price, what you're going to be making is going to be $122 for the 5 contracts combined, which is going to work out to be about $20 per contract. So let me do it one more time. I'm going to go right up here, 501. And if you look to the top, you're going to see $108. Now, if the share price continues to go up, and watch with me again, you can see the price is going to go up. Now, this option contract is known as a defined risk option contract, which means that if the share price keeps going up, your amount of profit keeps going up to infinity. That means there's no end to the amount of profitability you can get. The reason why it's called a defined risk option strategy is because the amount of money you paid for the contracts, if the trade goes against you, that is the only amount of money you could lose. You cannot lose any more. So with defined risk option strategies, you could sleep well at night knowing that the money you invested is the only amount of money that you can lose. Now, exit strategy. Anywhere on this green line before expiration date, if you determine that you have hit a profit level that you're satisfied with, you're going to go ahead, you're going to close the option contract, you're going to lock in your investment gains, and if you so choose to, you're going to go ahead and do this again. Remember, once you close the contract, you could go ahead and do 3 things. You could rinse this option strategy, you could repeat this option strategy, and always go ahead and lock in your investment gains. Now, if you decide to close the contract, let's say when you make $253, then you're going to close the contract, and the money you invested, you're going to keep that in your portfolio. The gains you have, which in this case right here is going to be $253, then you're going to go ahead and you're going to use the gains only in order for it to go ahead and trade the stock again. At that point in time, you're going to be playing with what's known as house money or free money. So you absolutely cannot lose anything because the money you're using to invest is free money. Now, that is what I am going to do. If you guys like this first option strategy, go ahead in the comments and just put buy call. So I know you guys like this option strategy, so I can make more videos about this particular option strategies. Now, for those of you that are a bit bearish on this stock, I'm going to show you an option strategy that you too can use as well. For that, we're going to go ahead and change the parameters to the top here just a tad. And what I'm going to be doing now, I'm going to maintain my buy right here, but I'm going to be changing from call. I'm going to be going over to put. Now, I will adjust my expiration date just a bit, and I'm going to be going out to November 28th, which gives me 38 days to expiration. The reason why I changed my expiration date is because now I'm betting against the market. The share price is going upwards right now. By buying a put, I'm actually betting that the share price is going to go down. Now, if I'm betting against the market, what I want to do is give myself a little bit more time in order for the trade to work in my favor. So now I have buy and I have put and I have my expiration date of November 28th. I'm going to go ahead and choose my strike price. The strike price I'll be choosing, I'm going to go below the share price once again, and this time I'm going to be going right what's known as at the money, and that's going to be the $4 price. Now, ATM or at the money simply means the closest strike price to the share price. So in this case, it's going to be $4. I'm going to go ahead, I'm going to click into this one. Now, once again, this one is known as a long put, not to be mistaken with the first option strategy we did, which was the long call. Now, how do you win with this one? So let's go ahead, we're going to hit continue, and feel free to scale up to as many contracts as you choose to or what your portfolio can afford. Now, we're going to go ahead and check out the chart once again. Okay, so here's the chart. And once again, let's start off with the break even right here. Remember, with this option strategy, you're betting against the market. So you're betting that the share price is going to come down. So at the break even price right here, the break even price is around $1.93. That should actually be the same as the break even right here. You can see break even to the top. So 203.193 is close enough. So what this is telling you is that your break even, the point at which you're not going to lose any money, is going to be the 193. Let's round it up. Is going to be $2. Now, at any price the share price drops below that amount of money, you're going to be making money. So watch again as I move the cursor to the left side. So it moved from 193 to, let's go to 163. Once the price moved from 193 to 263, you can see to the top part here, this is going to change here as well. So let's go ahead. We're going to go again. And now it's at 147, and you can see 45 gain. This again is what's known as a defined risk option strategy. So once again, whatever amount of money you pay to get into this contract, that is the only amount you can lose and no more. Now, the opposite end of the spectrum is that because this is a defined risk option strategy, your gains are unlimited. So if the share price continues to fall and it goes closer, as you can see me moving the cursor, $1.97, you can see your profitability is going to go to the top. If I go all the way to the end, it should say unlimited. And that is how you win with this new option strategy. And this is going to work specifically if you think the share price is going to go down. Both these option strategies can be used if you want to trade beyond meat. The only difference is your outlook on the stock. What do you think? The share price is going to continue to go up, or the share price is going to continue to go down? A little side note, I would not personally be buying shares on Beyond Meat, because any option trade or any trade you decide to do with this stock, it should be of a short-term nature. The share price right now is being manipulated by short interest and is being pumped as a meme stock. So any option strategy should be of a short-term nature, and you should not go for long date expiration dates. Remember, this video is representative of what I'm doing with my portfolio. Always do your own due diligence before getting to any options trade. And the last thing, the exit strategy for the long call is going to be similar to the buy call. All you need to do along this line, whenever you hit a target level of profitability that you're satisfied with, feel free to exit the trade. Lock in your investment gains, and then you could go ahead and rinse, repeat, and keep locking in those investment gains. And remember, the amount of gains you receive, you're going to use that money again only if you're going to get back into it, and your initial amount of money, you put that back into your portfolio. So investors and future investors, for those of you who had made it to the end of the video, you guys are the real investors and future investors. Now, for those of you who haven't already, now would be the best time for you to go ahead and like the video, subscribe to the channel. Make sure to hit that notification bell to get an alert when I post a video. But most importantly, I do go ahead and make all these free videos and this free content and put it out there because I'm trying to help as many people get into options trading as I possibly can. So if you guys know anyone out there that's struggling to grow a small account portfolio, then the right thing to do is to go ahead and share this video with them. Together, let's help as many people as we possibly can start generating income from options trading. Now, until the next video, keep pushing your investments.